Hey guys, Akhtar Khan here, back in the office in Mayfair, and in this video I'm going to be sharing with you how to structure an M&A business deal in such a way that you can make it little to no money down. So what I'm going to do is talk you through and walk you through step by step the 7 most powerful strategies that I use that are creative strategies that allow you to buy businesses with very little to no money down. And these are powerful tools that you can use that will give you the unfair advantage. So I want you to stay through to the very, very end so I can give you all of those 7 strategies step by step. Now, if this is the first time you've come to my channel, you don't know what I'm about, I've been investing in property since 2002. I've done over 208 deals. I've built a multi-million pound property portfolio that generated me a 6-figure income that allowed me to retire at the ripe old age of 37. I'm still doing deals today. I've done 208 property transactions. In the last 3 years, I've been building an M&A portfolio. I'm also the author of the Code Reaching Excellence, which is the missing piece for entrepreneurs that helps them to overcome a lot of the obstacles and mindset challenges that they have when it comes to leveling up their business and building wealth. I'm also the founder of the Reaching Excellence Wealth Academy that helps entrepreneurs, men and women of any level of experience, whether they're completely new or whether they're experienced 6- and 7-figure business owners, even experts, to be able to break through those glass ceilings, take things to that next level to build serious wealth and live the dream. And that's my mission. It's my mission to help as many people as I can to overcome some of the challenges that we face as entrepreneurs, the stress, the overwhelm, when you feel like you're stuck, you're spinning your wheels and you don't know how to break through. It's my intention and my mission to help people to be able to break through those things so they can build that wealth and live life on their terms. So why am I doing this video? Well, let me tell you, when I started out doing deals, it was tricky. I was always out there looking for that perfect deal, and it was frustrating. If you're into property and you come to my channel through property, or you know me through the property world, you probably know that, you know, for every 100 leads or 100 opportunities that you look at, you're going to find 2 potential deals in property. It's different in the M&A world because there's a lot more deals out there and there's fewer people competing. But the fundamental thing I want you to understand, and this is like a universal law, good deals are not found, they are created. You want to tattoo that on the inside of your eyelids, because in the time that I've been doing deals, 20 odd years, over 30 years experience in business, I've never found that perfect deal. A good deal has to be created. And in order for you to create those good deals, you have to get creative and have different tools in your toolbox. You can't just do the vanilla strategies or the vanilla way of purchasing properties or purchasing businesses. You need to have other clever, creative ways so you can structure deals in a way that's win for the seller and win for you. So this is what this video is all about. Now, when I first started out, it was difficult. I remember being super frustrated, you know, thinking deals didn't work, or I couldn't make them work, or I couldn't get big enough discounts, or I couldn't raise enough money. It's super, super frustrating. And if you don't have a steady stream of leads coming in and you don't know how to structure your deals, you won't get those deals in your pipeline in with solicitors and getting those deals and getting your portfolio built. So it's super important. As much as you need to know how to find deals, you need to know how to structure those deals cleverly and creatively so you can do more deals. And that's what we're going to go through. So let's dive straight into the content. Okay, so creative strategy number 1, and this is one of my favorites, is what's called a deferred consideration. Now, as I go through these strategies, some of these might relate to property, so I'm going to give you kind of the side-by-side comparison analysis. So what is a deferred consideration? Well, in the property world, we use this term called vendor finance. The vendor finances the deal. Deferred consideration basically means buy now, pay later. So that's in essence what you're doing. Now, why would you want to do that? And here's the reason why. Well, minimal capital up front, and you don't need to get bank finance. And that's the beauty of it. So how would you structure this? How would you propose a deal like this? It's really, really simple. If you haven't seen my previous video, I'll put a card up here. Go and watch that, because in that video, I teach the Godfather method, which is an incredibly powerful method for closing and negotiating deals with. You can either use it for property or you can use it for M&A. And one of the things that you have to do is go beyond finding out what the mechanics of and the numbers of the deal are. You have to find out the vendor's circumstances and situation, their wants and needs. Because when you have that information, you can then see whether they're in a position to do a deferred consideration. If they need all the cash up front for some kind of transaction or some kind of property acquisition, or they want to just retire or do something, then a deferred consideration may not work. And this is why it's important you ask very specific questions like, okay, once you've sold the business, what are you going to do? What are you going to do with the money? Oh, I'm going to go buy a yacht. Okay, how much is that? Just out of curiosity, how much is the yacht going to cost you? Oh, it's 100 grand. If they're asking for 400 or 500 grand for the business, you know they only need 100 grand up front. So that's the kind of thing that you need to be doing as a fact find before utilizing these strategies. So the more information you've got, the more you know what the probability is of a vendor accepting your offer on your terms. So the great thing about this is what will happen if you do a deferred consideration. This is the beauty of this. This is why I absolutely love deferred considerations. You may need to put an initial amount of money up front, a small deposit or something along those lines as a gesture of goodwill. Once you've taken ownership of the business and you're paying on a deferred consideration, in essence, the business is paying for itself. You're paying for the business out of its profits, which in essence means it's pretty much a no money down deal. So you'll have a period of time where you're paying off for the business, depending on what you've agreed. It could be 18 months, 2 years, 3 years, 5 years. But in essence, you've got that business for pretty much no money down, no big capital outlay, when it comes to the acquisition, which is an amazing thing to do. So you can go and buy companies that are generating six figures, healthy profits using a deferred consideration. So that's creative strategy number one. Okay, strategy number two, other people's monies, using cash investors. Now, there's an incredible opportunity right now. There's lots of people who've got lazy money sat in the bank, people who perhaps don't want to invest in property or don't want to get involved in a business, but their money is shrinking. Inflation is at an all-time high at the moment, so their money is shrinking, there's no interest. If you can give them a decent rate of return on their money, you can do this in two ways. You can either take a simple loan from them where they just loan you the money and you give them a fixed rate of return, or they can loan the money to the business, and it's a business loan in essence. Or the other thing they could do is they could loan the money, or they could become a shareholder in the company, and you can give them a slice of the profits over a long period of time. And this is a great way of doing things. And one of the things I always encourage people inside of our academy to do is to don't just propose a deal where you're talking about money or the interest rate. Really get to understand what an investor needs. Now, what's going on in their life right now? Where are they, in terms of age? What are they looking to do? What are their pain points? What are their struggles? What are their worries? What do they need extra money for? And if you can take money from someone who's got it sat in a bank account doing nothing, depreciating, and you can give them a better rate of return, it's a real win-win. One of the mindset challenges that people sometimes have is that they feel like they're asking people for money. Well, yes, you may be asking for money, but you're not really asking for money. You're actually asking them if they want to come into an investment opportunity where you're going to give them a return. So there's a couple of ways that you can do this. Depending on what you agree, you can either give them interest on a monthly basis if it's a simple loan, or you can roll the interest up so it's deferred to a later payment, a year, 18 months or 12 months down the line. This gives you some breathing space to get the business up and running. It gives you space to draw some money out of the business if you need to. If the business is profitable enough and it works for you, you can just give them a monthly interest payment out of the business. This gets you in and gets you started. You can give shares as well if that's what you want to do. You can get them to buy into the company. They can have a portion of the company, a slice of the pie. They can have a slice of the profits as well. It's win-win. So using other people's money, that's in essence what you would do. Okay. Why you would do it is because you don't have to utilize your own funds, and you're going to do a win-win, help someone else create a wealth as well as yourself. Okay. How you do this is just about having a conversation with someone and finding out what they want, what they need, and also what they're comfortable with. What's their risk profile? Are they happy to have it, a simple loan straight to you? Do they want it on the balance sheet of the company? Sometimes people might want more security. They might want to have a restriction on a property or something like that. So this is a case of you having a conversation with that particular cash investor and finding out what they want and creating a win-win for you. But this is a great way of doing things because we utilize investors' money for either property deals or for M&A deals, and it allows us to grow our portfolio way quicker. Okay, creative strategy number 3. Asset splitting, specifically property. Now, a lot of time when you go out to see businesses, sometimes they will own commercial property. It could be, a piece of land. With the scaffolding companies that we've got, there's one of the companies has got a large piece of land. It's worth about £700,000. It's the yard. Other companies might have a office building, or they might have a shop in the high street, whatever it may be. There may be different types of property, and you've got a couple of choices or 2 or 3 ways that you can utilize this to buy the business. So for example's sake, if a business is worth, let's say, £500,000 and there is an asset that's worth £200,000, you could sell that asset off. Now, there's a couple of ways of doing this. You could do this in such a way, if the business needs that property, you can do what's called a commercial sell and rent back, or sell and lease back, which means you can say, okay, here's the property. I don't really want the property. I'm going to sell that to a property investor. They're going to buy it for £200,000, but they're going to guarantee that we can lease the building for a period of time. Okay. So what you've then done is you've separated the asset, you've separated the property, you've sold it off. If it's got any mortgages and stuff, then you've taken that off the balance sheet, and then you've been able to keep the business and you utilize that, let's say a couple of £100,000 to go towards the acquisition, the purchase price of the business. So that's one way of doing things. The second way of doing things is if the property has got development potential, then you could develop it and you can uplift the value, and again you can utilize that for the acquisition. So a friend of mine did this with a business where they had a shop premises, there was an office-based business in the ground floor. They split that out. The upper parts were derelict, but had been derelict for like 30 odd years, but there was so much space up the top they were able to build 8 flats. So the minute they got planning permission and planning consent for the 8 flats, they increased the value of that building. They then refinanced that, and they used that refinance money to then pay off a big lump towards the acquisition of the business. So this is just a couple of ways of doing things. So property is a good one. Also, if there's assets that the business has that you don't want or don't require, you can sell those off and use that to fund the purchase. Asset finance. So what is asset finance? Well, asset finance is being able to finance some of the goods. It could be vehicles, it could be stock, it could be scaffolding equipment, plant equipment, and so forth. All of those things have got a value. So there are companies out there that would just give you finance based on the asset value. Some assets are going to hold their value. They're going to be at the higher end, almost like the Rolls Royce of assets. Some assets are going to be a little bit cheaper down the line. So what an asset finance company would do is typically lend you around about 50% of the value of the asset. And again, you can utilize that money for growth of the business or for buying out the business. Asset finance, if you want to put this into kind of equate it into property terms, is almost very similar to bridging finance. Bridging finance doesn't ask too many questions about the overall, they kind of value a property on bricks and mortar, whereas asset finance just values the equipment, and then they look at the income of the business. It's quite a simple strategy to employ, and it's one of the things that we're doing on one of our companies that's allowing us to finance some of the scaffolding equipment that we've got, so we can actually go out and buy more and grow the stock that we've got, so we can actually grow the sales. So asset finance is another option. Let's move on to the next strategy. Okay, so next creative tip is using money inside the business. So what do I mean by that? Sometimes businesses will have cash in the actual bank account, and if the owner was to take that out before the sale of the business, then there'd probably be a high tax amount for them to pay. So typically 30 to 40%, depending on the individual circumstances. However, if they leave that money in and then you as the new owner pay from the bank account to them, they'll only end up paying about 10%. The other thing that you can utilize is if the business has an overdraft, you can use that overdraft facility to then pay out the business. Sometimes businesses have got credit cards and charge cards and things like that too. You can also utilize those funds as a temporary measure to then pay out a lump sum for the business and then recoup the money later on. So utilizing funds that the company has is another strategy. Tip number 6. This is buying a distressed business for £1. So how do you do that? Well, there's a very similar strategy in property called an option, where you can put an option to buy a piece of land or property for £1, but you don't have the obligation to buy. It's just for the sake of the contract. Well, you can do the same kind of thing in M&A, which is where you can buy a business, buy a distressed property distressed business for £1. You do have the obligation to take it over, and you have the obligation to take over all the debts and the liabilities. But I want you to understand something here. Sometimes with a business owner, they can't see the solution to the problems. Sometimes the reason the business is failing is not because of the business, it's because of the business owner. So if we kind of equate this into property terms, imagine you go and see a property, it's got some problems with it, there's some damp, owners become scared, they're like, oh, it's damp, what is it? And it's the unknown. Sometimes it's the unknown that creates fear and panic in people. They don't know how to fix it. But if you have the building experience and the knowledge and know how to fix damp, or someone who can fix it for you, it's not a problem. It's the same with a business. If you've got a business and it's got various issues, it's got a tax issue, it's got a staffing issue, a HR issue, and there's all these problems. If you know how to fix them, or you can find experts, or you've got a power team that can come in to help you fix those, then they're not a problem. So you can take on the liabilities, take on the problems, fix them, and turn the company around. This is another great way of doing things. It's a little bit more advanced, and you need to have a little bit more of the skill set, or at least a power team around you that can help you. But this is something else that you can do. So the next strategy is actually using a combination of all the previous ones that I've just mentioned. So sometimes you could use a combination of investor finance and a deferred consideration, or you could use splitting off the assets and selling a property, and then a deferred consideration, or also adding in some investor finance as well. There's a number of different ways you can use this, okay? So I want you to look at all of these tools. You don't have to use them one at a time. You can use them in combination. And again, as I've mentioned, the language I keep using is these are tools in your toolbox. So once you've gone through that process of perhaps using the Godfather method and understanding what's going on with the seller, then you can look at the deal, you can look at what they need, you can look at what you need, and you can pull these tools out of the toolbox and say, hey, would a deferred consideration work here? Okay, maybe not, because they need to find £100,000 initially, but they can wait for the rest of the money. Maybe we could use an investor's money in for the first £100,000 and put the rest on a deferred consideration. So all you need to know is what they need, what you want, and what tools that you can use to make the deal happen. This is how you'll get more deals done, and this is also how you have the unfair advantage against the competition, because unless people know this stuff, they're going to go through the vanilla ways of doing things. And even if people do know this stuff, there's a lot of people out there that know how to do things. They know these clever creative strategies, but they don't know how to communicate them and negotiate them when it comes to actually doing the M&A deal. So I've seen it before where people don't know how to communicate this, or they lack confidence, or they fumble their words. If you're not comfortable and congruent with this stuff, when you're conveying this stuff to a seller, they'll pick up on your incongruencies, they'll pick up on your discomfort, and they'll just go off, and they won't be comfortable. They won't do the deal with you because they'll feel your lack of confidence. So it's important as a negotiator, when you're using these creative strategies, that you first of all understand them, you know them inside out, and you can explain them to someone in layman's terms. If you can explain this in language that they understand, it's going to make it so much easier for them, because if you confuse them, you're going to lose them. So if you can explain deferred consideration, well, you don't have to use the terminology deferred consideration. You can say, hey, look, here's what you want, here's what we want. The best way we can make this deal happen is that we can buy it, but we're going to have to pay you in installments over a period of time. Would that work for you? And they go, okay, how much would it be? I need this amount. And they start discussing what the payments are going to be, or the payment terms and intervals are going to be. It just needs to be that super simple. And the thing you've got to bear in mind is sometimes with owners of businesses, if they're like never sold a business before, they don't understand the process. They do not understand all these creative strategies that I've just taught you. So it's your job to know more than them, but it's also your job to walk them through the process and explain things to them in a way that they can easily understand. And then once they have understood it and they've grasped the concept, you just tend to go off and like have a chat with someone, their lawyer or whatever, and they can back everything up that you're saying, and then get them to a point where they can sign a heads of terms, which is a contract that agrees the deal. So these are 7 ways that you can use these very powerful creative tools to do more deals, make more money, and also have the unfair advantage against everyone else that's out there trying to do these deals. So go and put them into practice. Now, you've probably been out there, been on courses, or you've been on workshops and masterminds. Maybe you know a lot of this stuff and you kind of have an understanding of it, but you don't know those finer distinctions. And this is where people trip up all the time. Not knowing how to communicate this stuff to a seller creates that kind of disconnect, and also means that those deals don't get done. If you want to find out more about this stuff, then look around this video. You'd have an opportunity to book a call with myself and my team, and we can put you through a strategy call that can help us to identify where you are now, where you want to be, what gaps there are in your skill set, and we can give you a system and a process of what to do to be able to rectify that, so you can take your business to that next level. The next thing I'd like you to do is to join our Facebook group. There'll be a link below this video. I'll be sharing out content in there on a weekly basis. I'll be giving you tips, tactics, strategies, negotiation tips. I'll also be going live to answer your questions. So whatever burning questions that you've got, you can put them in the group. I'll be going live to answer them. So go and join that group, the link below. Join that group now. So what I'd like you to do now is to like and subscribe, and also put any questions you've got in the comment section of the video. Also, if you've got any comments and feedback on this video, please put it down below, because that really helps me to understand what it is you guys want to learn, and I can create more content. So go ahead and do that now. I hope you found this video useful. It's giving you the tips, the strategies, and the creative ways of doing things that will help you to do more deals creatively without utilizing lots of your own money. Go ahead and do that. Go ahead and put this stuff into practice. Let me know how you get on. Again, post in the comment section below, and I look forward to seeing you on the next video. Take care. Bye for now.